Hi, I'm Jon Bey, CEO of Standard Uranium. We are a Canadian junior uranium exploration company focused in the Athabasca Basin of Saskatchewan, Canada. We have 11 projects. 3 of those are currently under JVs, and we're looking to add a few more companies this year. Thank you.
John, good to see you. Welcome to London. Here we are, WNA.
Good to see you too, Matt.
Stacked and packed downstairs, it looks like.
It is, it's booming. I've never seen it this busy, actually.
Right, and why are you here? What do you want to get out of it?
Yeah, I come here for a few reasons. Number one, we are continuing to grow our project generator model, and we are looking for new JV partners to focus on 2 or 3 of our projects for 2025. So that's focus one. Number two, always educating. There's a lot going on at this conference. A lot of good speakers, a lot of new topics. I want to get top of the industry news coming. I want to know what's going on. Number 3, the other CEOs that are here, networking. There's fund managers, investors I want to speak with. So a lot of things to try to accomplish in 3 or 4 days.
I was about to say, 11 projects, that's a lot of money needed. So this new model, explain it. I know we've spoken about it, but hit me with it again.
Sure. So what we do is we stake a project in Saskatchewan. So all the projects are in Saskatchewan at the Athabasca Basin. We spend about 1.5 to 2 years actually working that project, doing some ground geophysics, doing some basic geology work to get it drill ready. And then what we do is we get First Nations to sign agreements with us on those projects. We get drill permits in place. We get all the vendors lined up. And then our team of geologists actually run the project. So we make it turnkey for new companies that want to come work on the Athabasca Basin with us.
Okay, turnkey. So staking, we get all that other stuff that needs to go on. It takes a while to do it, but you also got to know what you're doing, right? Because we were seen as a lot of new entrants into the marketplace from Australia, lots of different places, but not isolated Australians. They don't quite know what they're doing. It's not as simple as it sounds.
That's true. And I can see we've been doing this for the company itself for 7 years, but our team of geologists for longer than that. So we have got great connections with the government, with First Nations, with all the vendors. So for us, it's easier. It's easier because we've done it. We know the people to connect and make things happen. So we can do things pretty rapidly and run the programs ourselves.
Right. And obviously with this market at the moment, this week's been brutal across the board.
Yeah.
But uranium's been kind of like stop-start. It's like companies think they know where they're going. The market's taking off, make plans, and then, reset time. So that you change your business model because of that or because of lots of things?
Well, primarily it was because as we grew our company up to 11 projects, each project cost money to advance forward. And we wanted to be able to advance those, get a lot of shots on goal, as they say, by putting a lot of drill programs going. So for us to fund every one of those projects would be extremely difficult. So we figured the best way to do it is
difficult, you mean dilutive?
Dilutive, and also difficult to raise the capital to do that, right?
Yeah.
So we figured out the best way to do this was find good partners to come in with capital, and we could run the program, get multiple projects drilled each year without diluting ourselves and having to spend that much money ourselves.
Right. So where are we today? With how many of those have been JV'd out and financed with someone else's balance sheet?
So we made the transition last summer, and between the summer and the winter, we signed 3 deals.
Right.
So we now have our Canary project, which is done with Mamba Exploration Australia. We have our Atlantic project, which is with ATCO Energy in Vancouver. And then we have our Arrow Energy combination with our Sundog project near Uranium City.
Same model for all 3?
They're very similar, little different pieces, but the goal is for us to do a 3-year earn-in. So they come along and they agree to do 3 years where they can earn up to 75% of that project by spending cash on the ground each 1, 2, and 3 years, paying us cash, paying us shares, and paying us to actually operate the project as well.
Okay, so basically your kind of cost of cover, you're not having to raise money or as much money to kind of cover your G&A. That's covered by these management fees.
Yes.
Right. And how else do you make money?
Well, we raise capital to fund our 100% owned project ourselves. So for us, right now, as we go into the fall, our next 2 projects are Corvo and Rocus. We're going to be raising a bit of capital to spend on those this fall.
Right.
What we're going to do with those, when we stake those, we've done some early work. We're going to do some geophysics and have those drill ready for 2020.
More of the same, tied up in a pretty bow for someone to come along and allocate a budget to it.
Exactly.
And earn in.
Yes.
Nice. Okay. So with the 3 that you've done, are they your best projects? Is that what you do first?
No. Well, our flagship is Davidson River, and that's our best project. Okay. We're holding on to that one. We initially said we want to hold on to it 100% for ourselves, but now we've been approached by multiple companies. Juniors, we're not that interested in, but some of the top tier companies, the majors that are poking around and approaching us.
Right.
That's more interesting to us because when we look at bringing on a major or, a mid-tier company with long-term vision and lots of capital. We're not worried about year to year raising capital to advance that project. And we're not going to JV the whole thing. We're only going to JV 50% of Davidson River should we go that path.
Right. And look, I'll refer back to that comment I made about the stop-start in this market, right? You're going to have to be very selective and very careful with who you get into bed with, right? Because they're all going to find it tough.
Yeah.
And they've got, varying degrees of being able to cope with it. Raise money cheaply, be able to, get through to the end of this 70% earn it, right? So, and you need to start your own business model a year ago, which was a case of just get this goddamn thing started and make sure we can do what we think we can do and show the market we can do those things too. So moving forward, I'm not saying they'll be better, they'll be different in terms of those partnerships, I assume.
That is correct. So as we go down this path and we figure things out, there's little changes to be made. We're looking for, as I mentioned, second tier and first tier primary companies that can come in and have a longer term vision. No issues with raising capital. So that gives us, 3-year security that project's going to get moved forward. The other projects, should a company not be able to raise capital and move forward, we get 100% of that project back.
That's
fantastic because we've actually worked that project, moved it, advanced it further up.
Got more data.
Our geologists have worked it. They've got a better understanding. So that's all great for our company and great for our shareholders.
Okay, so all that kind of risk mitigation in terms of how you set up those agreements.
Exactly.
So 100% back is awesome, I think.
The devil's in the details, as they say, making sure you get it all back and you've learned something, you've advanced the project, and it's been a good.
Right. Okay. So if I look at the rest of the portfolio, you're not, I guess, because you've got 3 in the bag, you're not necessarily in a rush to do the next deal, but because you want it to be the right deal with the right partner with, I guess, better risk profile, bigger balance sheets, all that kind of good stuff, right? Is also a little bit of you got to time the market right.
Yeah. So it's interesting you say that because here we were last year at this time. The market has started to move rapidly in the uranium space, and we'd gone from $55, and I think by WNA we were up in the $60 range. And then by the time we got to Christmas, we were getting to $100, and everyone was feeling fantastic, and everyone was jumping in the uranium space. And money was flying. Yeah. Every company was coming there, so deals were flying. We were getting deals done. And then you have the opposite happening from January to now, where it's on the opposite, gone from 105 down to 79.
Yes.
And those companies are struggling to raise capital, and they're wondering, am I in the right space? For us, our vision is longer term. We're seeing this through. We're going to continue to drive forward. We're going to keep our projects moving. If we get a project back, that's fine. We'll line it up, make a couple changes, and get ready for the next partner to come in.
But there are people out there. It seems to be there's a new entrance every month into this space because the general thematic is obviously very, very positive. We talk a lot about the demand drivers and, quite frankly, the lack of supply into that demand as well. So people see the long-term prospects for uranium. There are people knocking at the door. You're not struggling on that front.
Yeah. So it's interesting you say that because when I look at the bigger picture, we see the people in the industry and people who are in the mining sector, they look at all the different commodities out there, and gold's having a nice run. Copper was pretty good. Lithium had a big run last year, then it got destroyed. Yeah. Uranium, it had a big start, came back a bit, but people still looking ahead think uranium is going to be strong. It's still predicted to be one of the top commodities for the next number of years, and all the bullish talk coming from the meetings downstairs this week, it's hard to believe that it's not going to continue to have a really strong future.
Oh, yeah, crikey. I think the conversation's downstairs. Industry gets it. Yeah. Industry understands it. Like I say, the overwhelming numbers, as far surpasses anything we've seen in recent years at WNA. It feels like the market hasn't. There's a huge disconnect between the equities at the moment.
Well, there's a lot going on in the general market, and when you see the equities and the uranium space get beat up the last 6 months, the message we keep seeing and hearing, the retail investor is like, I've had enough. I've been getting slaughtered in the uranium space. I'm getting out.
And everywhere else, by the way.
And everywhere else, but the uranium market, and especially the junior ones. The juniors, sub $100 million market caps are getting beat up probably more than anyone. So high risk, high reward. People pull out of those ones first, and they sort of go to their blue chips and sort of wait it out. So for us, we're waiting to see that market turn again. We're keeping our capital going forward and driving exploration programs and waiting for the retail investor to come back into the market.
Well, I think the retail investor is waiting for the markets to get broadly to get better. They're waiting for the economies to get better. They've been hammered at home, disposable income, discretionary spend. Definitely. I've been talking about it for 3-4 years now. And news like from China in terms of maybe not going to hit their kind of targeted 5% growth rate. That kind of scared everyone this week. You got numbers out of the US, scared everyone this week. It's kind of tough out there. So these long-term thematics, they've got to work. They've got to work. That's the only way you're going to, if you can sell that message, that's the only way you're going to get investors to keep their money in or put new money into.
Yeah. Well, one thing we are seeing in Canada, at least, is we're seeing the interest rates start to trickle down, and the government's cutting the third cut in the last few months, and probably 2 or 3 more coming before Christmas. We're seeing a potential political change in our governments over the next, who knows when the next election is going to be called, but we're seeing some whispers of that about to happen, and that would really sort of drive the resource industry and hopefully bring investors back into the market.
I do hope so. There's some quite bizarre policies being enacted in Canada by your governments, not least of all the capital gains, which I think is crazy.
Yeah, not ideal.
Less than ideal. Okay, for you, future looks bright. Obviously, this new model's working for you. You've, in terms of the conversations you're having downstairs, people get why you've done what you've done and how they can get involved.
So I think they've got a good understanding. At first, it was like, okay, we see what they're going to do. Let's see if they can do it.
Right.
So here we are a year later. We proved we can do it. Signed 3 deals, advanced, did 3 great drill programs. Now it's getting our next projects ready and advancing into year 2. So people that have been watching us, JV partners, some pretty interesting companies are talking to us now, which is great to see.
Right.
And for the retail investor, our message is, look, be patient. Look at us now. The share price is, at a pretty much an all-time low. It's a fantastic time to get invested with us and watch the growth come over the next few years.
But what type of investment is it? I get the be patient. It'll come back. The market will come back. All boats float. All of that good stuff. But what type of investor do you need to be?
Well, it's any type of investor, really. I mean, we're looking to grow the story to the retail investor primarily. We are seeing the institutional investor. They understand it. They get the story. But it's the type of investor that's looking for an opportunity where they can have a big share appreciation with the discovery hole. So that's what we're trying to do.
But patience required.
Patience is required. Look, it's you don't want to be day traders because it's very volatile. Right. You want to be long-term thinking. You want to look at opportunities where you think a company has an opportunity to make a discovery. And in junior exploration, that's when the big money's made, when a company makes a discovery. Like F3 a couple of years ago, ISO made a big one, NextGen prior to that. And so that's where the big money can be made. Yeah,
okay. And that requires money being thrown at it. In this case, not your own, but your partner's money, which is good.
A bit of both, yeah.
A bit of both, so with the staking, etc., right? And the packaging up for sure. In terms of your business model, you kind of got this portfolio. You talk about prospect generators and you will do staking and all of that kind of good stuff. But right now, the best effort in terms of, the best return for you would be spend time on getting these other projects out and JV'd, not too much new staking, not too much new repackaging of projects. Is that right? Or how do you view it?
Let's back up for a second here. So the Athabasca Basin is 100% staked up, which is ridiculous because there are areas that are staked that are a kilometer deep that'll never be drilled. So everyone came there, staked their land, and now the only way to get land in the Athabasca Basin is if someone lets it go. So how it works is you can stake it, you can hold it for 2 years, and if you don't do any work, you have to give it back. Then it comes in the pool. What does that mean,
do any work? Do what?
You have to actually work the ground, so spend on it, do exploration work, and you get credits with the government, and then you can keep the land. You have to spend on it every year to keep it in good standing, and if you don't, the government takes it back. So when land becomes available, it's like an online staking rush, and everyone evaluates what's available, and if they want it, they try to go online and stake it. So we've got a team that does that. So if a good project opens up, we go after it. And you can stake it very cheap. That's the easy part. Then you have to actually go do the work on it, and that costs money. You do some initial groundwork, you go walk it, check it out, and then you do some geophysics, try to find a good area to drill, and then you line up the drillers, and away you go.
Is it a case of all the good stuff's been taken, or you don't know if not enough work's been done on it? How do you do it?
We look at it as like a lot of the really good stuff was taken by the players who've been there for a long time.
Yeah.
And if they did some work and didn't want it, they let it go. And then the next group came in and they staked it, did a bit of work. So look, all the ground in the basin is now staked. There's a lot of companies there doing a bit of work, those that can raise money and those that can actually get work programs done. And we'll see, you'll see exploration programs in areas that have never been done, and you'll see discoveries made in regions that people didn't think there was uranium before. That's how the whole southwest corner where NextGen is, that's how that all got started. People weren't exploring there before that area, for that time of like 2010.
Right. You remain positive, one, about your business model, and two, about the market. It sounds like
Well, the market is the market. So we're going to drive our business forward and build the company, and then the market will catch up eventually.
Okay. Well, John, I appreciate your time, man. I really appreciate your time. Hope you have some good meetings. I mean, call me. We don't have to do an interview, but call me. Let me know your kind of takeaways from the conference. I'll be intrigued to see what the kind of main the
Maybe we'll see you in Colorado.
Absolutely.
Yeah.
We'll see you next week then. Okay, cheers.
Good.
Bye.